Welcome to Tony at 12. I'm Tony LeBlanc, and today I'm in conversation with Toby Birch, who is a senior investment manager at Gower Financial Services. We're going to take a look at how the last quarter has performed in terms of world finance and also the way the indices have performed since 2010. And we'll come on to that in a minute because there's a reason to it. Good to see you as ever.
And you, Tony. Good morning.
Right, it's been quite an interesting 3 months. I got the stats from Market Watch, and the FTSE 100, which I know you don't like, appears to have put on 2.98%, which is not very good over that period of time. But
Take it.
what amazed me was Japan.
Japan has had has two factors going on. First of all, the yen is devaluing quite a bit. So over the quarter, it lost, at least against sterling, 7%.
Mm-hmm.
So when currencies devalue, obviously markets tend to go up because it translates the overseas earnings. But in spite of that, you're still looking at a very chunky return. And this is because they've been going through a reformation process of trying to unbundle these conglomerates, which kind of built up over decades. And now there's very much a culture of being much more focused and concentrated, and aligning companies together rather than just collecting them like a hobby, effectively.
I mean, if you take Hitachi, for example, is that quite a good one to look at in terms of the fact that it seems to sort of cover absolutely everything, and obviously got perhaps too big for itself, or
Yeah, I think that the stock market has recognised that there's governance factors first of all to make it attractive to foreigners, but also sort of release of value by decoupling some of these companies that have no bearing on what the main company is doing. It does release a lot of value, and this is going on all throughout the market, and it's looking pretty successful. So it's really come out of nowhere after decades of flat movement in Japan after this big bubble which peaked in the late 80s.
because we've had this conversation time and time again about when will they ever beat that 1985 barrier or whenever it was, and they have.
Here we are. Yeah.
But by God, it's taken a long time. What about the US? Standard & Poor 500 was up by just under 10% on the quarter.
I think with the US indices, as we've discussed in the past, these are dominated by a very small number of firms. And you've seen this concentration of a small number of companies being a major percentage of the overall stock market. And we saw this in the peak of the tech bubble, but also 1929. So I'm not saying there's a big crash coming, but
no,
it's a symptom that these firms are it's kind of misleading. I use the analogy of generals of rushing out the trench and leaving all the troops behind. It's kind of it's not a big
that never happened.
No, not actually saying not that.
Yeah. But I mean, do you see the US economy continuing to expand, or?
It's been doing pretty well. I mean, but part of that is the sort of massive stimulus which is going on because obviously election year, the Democrats are going full guns on hosing the economy with money and different packages, which is understandable. So the debt's built up at the same time that the growth is there as well. So got to question it: is it sustainable? But with 4-year election cycles, no one cares really.
Yeah, well, that's the problem, isn't it? It's short-termism the whole time.
Yeah.
Sterling. That seemed to be relatively stable if you look at its relationship with the euro and the dollar at the present time. What's likely to rock the boat there?
It's already down to interest rate differentials at the moment. America and Britain have got similar levels. We're expecting the US to cut rates first in June. Had been slated for March when people were getting excited last year, but effectively got no major changes between the different interest rates across the continents. So the exchange rates haven't moved much, but I say these things tend to come in cycles, and typically in the summer when stock markets are flat, you often get a sort of blow up in currencies. And yeah, I wouldn't be able to predict what it's going to be, but I can see some kind of wobble in the short term as we approach the elections towards the end of the year. So there's, for now, it's all pretty calm. But yeah, just keep, watch the space.
Energy prices. Now,
Mm.
Brent crude has gone up nearly $10 a barrel since we spoke at the beginning of the year. And you did at that time say that you thought that there's every likelihood that was going to take place because of OPEC. Any surprises there?
Well, it's not just oil. We're also seeing a pickup in a lot of other commodities like copper. Gold has broken to record highs in US dollars, which is
Yeah.
significant. And also cryptos have really been on a tear as well. So it's one of those things you might only work out in hindsight, but this kind of has a feeling about a degree of loss of faith and maybe this de-dollarization that's going on in developing countries is having an effect. You don't see it on the main exchange rates so far, but I just have a feeling that this is a symptom of something much deeper. As we discussed before, the oil demand is never ceasing, particularly in developing countries. And in terms of America, they've been very fortunate having their fracking
Yeah.
and their own domestic energy. It's been a huge help compared to Europe.
And Europe appears to have weaned itself off Russian oil. Is that true?
It's well, they're using a lot more coal, and this comes out in the German economic growth figures over the last year, which have been negative. The UK's been flat as well, but America's GDP has been about 2.5% over the last year, and this is mainly down to energy. So the Germans having to import, and we're kind of a halfway house, having some energy dependency plus a degree of renewables. So it's really hit the Europeans hard by not having access to Russian oil. And in the meantime, there are plenty of other countries who are more than happy to take Russian oil and pay it in their own home currency. So
and it has been said that some of them then sell it onto the European market.
Exactly.
No names. We won't risk our lives by mentioning any specific countries when we look at that. Theoretical recession situation.
We have had a pretty flat growth. I think it was an article by Liam Halligan in the Telegraph over the weekend showing growth differentials in different countries, and a lot of it does go back to energy. And ultimately, America is still, in spite of what's going on, still relatively free from a capitalist point of view, whereas Europe is pushing more and more towards the left and central planning, bureaucracy, etc. So it's hard to see where we go with such significant debt levels. What can anyone really do? It's all looking fairly flat and sluggish. So you've got to watch out, because if you do get inflation coming back, this is reminiscent of the stagflation period in the 70s, which is pretty much the worst of both worlds.
Yeah. I mean, technically, it was very slight, wasn't it, in terms of the basis points, I suppose, that you'd have to say, in terms of the way in which it worked. Inflation's down. Do you think the 2% target is achievable in the UK, or do you think that we're going through a bit of a false state at the moment?
I think it might be achievable temporarily. And again, I keep harking on about oil, but energy prices are a major component of costs. I know you strip out energy and food from the core prices, but it impacts on everything. So the British pay, our electricity prices are, I think, twice what Americans pay because of this energy dependency issue. And also the renewable energy has a factor as well. That's pretty expensive. So that plays a part. So it's looking like, I'd say we might get there, but I think central banks are worried about cutting rates too quickly. And again, harking back to the 70s when Nixon pressurized the Federal Reserve to cut rates for political reasons.
Yeah.
And inflation shot back, and then it all had to repeat over again. So I think central banks have been relatively cautious. And again, they've not not cut themselves in claw in the last few years already.
I mean, was the Bank of England too slow putting it up?
I think, yeah, I mean, I remember a cartoon at the time from a couple of years ago, these dinosaurs standing around and they're watching this comet plummeting down to Earth saying, oh, it's transitory, which is what they talked about inflation then. And yeah, you could say, oh, they should have put rates up more quickly. But if the economy was flat and sluggish then, yeah, there was no good time to do it. But if they had done it, they could have pushed the economy down further. And there just wasn't uh, the will for people, suffering from, post lockdowns financially, to have rates jacked up at the time. And okay, you might say that if they start earlier, they wouldn't be as high as
Yeah.
they are now, but it's a real hindsight thing.
Yeah, very much so. But that nevertheless, there are a lot of people who are about to presumably refix their mortgages this year, and they're going to find that they're paying considerably more than they have been to date.
Very much so. I think I know there's about 1.5 million people on fixed rates going to have to take the pain this year, but it's over 4 million mortgages that are changing, not just from fixed, but trackers and the like. So it's a good proportion of the UK population, and as we approach elections sometimes, so it could have quite an effect. And it's death by a thousand cuts. You know what it's like with
Yeah.
everyone, all these institutions, utilities gouging us with higher prices and charges, and the governments are at it as well. So it really is, being attacked from all sides at the moment.
Housing market in the UK seems to have stabilised.
For now, I mean, it's okay. We talk about the number of mortgages, but still a considerable number of people without mortgages who can downsize, and I think because of the because like a ladder effect of mortgages coming up for renewal hasn't all come in one go. So
Yeah.
that I don't sound so arrogant saying, oh, people can budget for this, because often they can't because they're already up against it.
Yeah.
But you can plan ahead to a degree. So as the mortgage rates go up, then hopefully you get some pay rises coming through. I know there's lots of headlines of high pay rates coming through in the UK, but they do tend to lag.
Yes.
So net people are certainly no better off and probably worse off.
Now, one of the subjects I like banging on about is bankrupt local authorities in the
Oh God.
UK, of which my dear friends at Woking Council have really, they came out with a leaflet actually, which sort of said
Okay.
we've got a few problems. We owe £2.1 billion. Interest payments and other charges come to £64 million a year,
Wow.
and we're going to have to put up your council tax by 10%.
Wow.
That's only on their element because, as you know, in the UK, the council tax collects for the other local authorities, county council, police,
Okay.
etc., etc. So, the Woking element went up 10%, and as far as Surrey was concerned, that they take a share of it, of course. So the
Mm.
Surrey bit was 3%,
Okay. That's
which means that
cheap.
it
Isn't
wasn't the headline that one sort of looked at by sort of saying, well, it's all going to be the whole lot's 10%. It's only the Woking Council
it?
bit.
Okay. Yeah,
But
fair enough.
I just don't see how these local authorities can get themselves out of the hole that they're in without considerable support and help from the government.
That's right. They can't print their own money like in like the government, and there's a similar problem in the United States as well, with yeah, with their regions too. It's very hard to say that all the time. You got again, a lot of these costs aren't services; they're pension costs for the employees.
Mm.
So it's a real tough one to crack.
And that, of course, is what hit Birmingham, wasn't it? The fact that they
Yeah.
hadn't been paying female staff at the rate that they were supposed to, and
Mm.
suddenly those chickens came home to roost.
Yeah, it's always people realize
Woking
them.
Woking solution, Toby, is to close the 6 public toilets within the borough. You've got more
God.
public toilets on Alderney. I mean, when you look at it from that point of view, you do have to ask yourself about the mentality
It
of
is. Is it? It's the phrase that penny wise, pound foolish, or something. It's just ridiculous.
And very appropriate with pennies and toilets. But there we are. Now, I suppose to add further to inflation, we hear that the living rate wage in the UK is going up to £11.44 per hour. I mean, obviously, people need that sort of money to
Yeah,
manage, but can businesses afford it?
it's a good question. Ultimately, you need to pay more to get the staff because uh, the enticement to do these kind of jobs, which are
Mm,
pretty grim. If you're just doing it, you're not even breaking even. You're just going to stay on benefits if you can. I mean, apart from like small companies, which obviously going to suffer, I've been surprised by larger firms, particularly private equity driven ones.
yeah,
We keep going on about this, the high debt levels and interest rates shooting up. Uh, they particularly find it hard to recruit. And you notice it in places like airports. If you ever have the joy of going through Manchester and the like, these large chains just don't have enough staff, and it just makes you wonder how weak the business models were in the first place when small increases in basic pay for the frontline staff having such an effect, and makes you think there's more problems under the surface than you realise.
mm,
All these things have went wild when interest rates were at zero and private equity was hoovering everything up. And this is one of the consequences. It does feel like wherever you look, it's governments or local councils or private equity firms. Everyone seems to be caught in the same trap.
yeah,
It's almost like a debt trap of the old days.
yeah, yeah, yeah. Time will tell.
Mm.
Time will tell. Now, here's another good one for you, Toby. Thames Water.
Oh, ouch! Dear.
Nationalisation or administration?
Yeah, it does. It does beg your belief because you remember, it got privatised in the first place because it was so badly run, and it does philosophically make you think, oh, not again. Or going back to full circle to have a government-run organisation. It doesn't sort of bode well for the future. But then again, you get the other extreme of the again keep banging about private equity like Macquarie, who stripped out dividends to the tune of
Yeah,
about almost £3 billion
yeah,
over the years they were there, and left it with massive leverage. So it's got 84% gearing at the moment, and they're talking about Thames Water putting up bills by 40%, 40. It's just it's just like a death roll in corporate terms. So you kind of reluctantly think that nationalisation might be the thing, or even if the government could run part of it.
yeah,
But when you have that situation, the private owners then take advantage and asset strip and cut corners again. So find myself scratching my head all the time, saying, "What is the philosophy and what is the way forward to cure these problems all over the place with high levels of debt and worsening service. In the case of Thames Water, uh, terrible pollution. So
yeah.
it's a struggle. Back in the Thatcher era, you could say for sure, let's privatise, let's give this a go. But we've done everything and end up in a worse state, unfortunately.
Yeah, I mean, I think the regulators been fairly weak in
Mm,
terms of their outlook on things. And, I just wonder with a company like that, if you were to let it go bust, if
mm,
it was a commercial company, you could then buy the assets up at 10 cents on the dollar,
mm.
which would presumably be a lot cheaper than actually having to nationalize and pay the going rate.
That's true. It's because the ownership now is it's fairly benign. It's uh, pension schemes
Mm,
and sovereign wealth funds of other countries, and you feel bad because these are generally sort of reasonably beneficial organisations, and having them, the equity holders, being burnt is a tough call. And also they're pension funds too, so someone somewhere is going to get the
Oh
hit.
yeah,
But
yeah, 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 yeah. But
you'll,
should they
yeah,
not have thought that before they got into it?
yeah, it is the want of the equity holder that you've got to take the pain as well as
Mm,
the upside, and it was seen as a safe bet, and ultimately the risk analysis was incorrect on thinking that buying utility is a safe call, and it's not. So ultimately, yeah, philosophically, the equity holders will have to either inject more capital, which they pushed back against previously, or take the hit. And
Yeah.
I don't envy them, have to say.
No, no, no. Let's get on to the US general election, which isn't that far away now, is it?
Mm, yeah.
The return of Trump.
I think it's looking pretty likely. I mean, a lot of financial people sort of roll their eyes and wring their hands at the thought of it. But if you go back to the time he was in charge, the Americans weren't invading anyone, or
No.
they weren't bombing countries into the last century. Again, it's not everyone's cup of tea, particularly overseas, but he has a strong following in America. And if you believe in democracy, you take the leader.
Yeah.
I think nowadays that philosophy, that belief in democracy, is pretty much falling by the wayside now, because particularly on the left, they just won't accept him back. So you could see potential division in the states that goes beyond just social media comments, but goes a lot deeper.
Seeing it in
Maybe,
the UK, aren't we? We're seeing it in the
yeah,
UK. Breakdown
feels
of
like,
law and order.
yeah,
Um,
it is becoming very bad in the states,
mm,
particularly in Democrat areas like New York and San Francisco, where you just can't stop people shoplifting.
yeah,
It's
that's
got
right.
this real end of empire feel to it, which is a great pity to see. If you've been a fan of America in the past, like I have,
Yeah,
it just seems to be decaying from within.
yeah.
And if America goes, then you know who else is going to fill the vacuum?
Well, that's right. That's right. Yeah, yeah. But there we are. Um, UK general election. Got any ideas on dates?
I think Jeremy Hunt let slip something about October by
Yeah,
accident.
yeah, yeah.
Nothing is by accident in
No, of
uh,
course it isn't.
government
Of course
statements.
it isn't. I mean,
So,
based on the fact that there might be one between now and the time that we do our next gig at, what was it, July?
mm,
I was thinking that possibly we'd just have a quick chat over the last 14 years. I mean, we
yeah,
don't normally talk governments, politics, and business all at once,
mm,
but they are interrelated. And we did a little bit of research, and using the hated, dreaded FTSE 100 as the yardstick. Um, if you go back to 2010, Cameron comes on board 1st of May with Clegg coalition, FTSE at 5334. FTSE, of course, damaged severely by the 2008 financial crash. Yeah.
mhm,
Um, so that's the yardstick, and of course they sort of chug along to 2015. Conservatives get 330 seats. Cameron promises a European referendum, and by that time the FTSE had got up to 7,040. So quite a bit of acceleration in those years. Any comments?
yeah. Again, just to caveat the thoughts on the FTSE 100. I mean, because I think about three-quarters of its earnings are from overseas, it's not a good measure of the UK itself. And also, the structure of it is pretty different from other countries like America.
Yeah,
So a lot of it's made up of banks, so oil companies and industrial. So it's quite what we call sort of old world
mm,
equities,
mm,
which is not to put these companies down, but it plays to a different drum than other markets. So it does tend to lag. And over that period since Cameron came along, I think the market's up about 50%, but that's just the headline FTSE index. When you have the total return, including dividends, then it's a lot more respectable,
yeah,
and as good as Europe and Japan over that period. So I think that the main impact that politics has, and I think of the safety valve of the economy is really in sterling. So if things are a bit mixed, like we had post Brexit, the pound weakened quite a bit. Again, the FTSE went up because of that, because of the overseas earnings. We
yeah,
mentioned this before.
yeah.
Um, it's not a bad yardstick, and I have always feel that markets tend to go their own way in spite of politics, but it does have an impact on the pound and also the bond market too. as we saw with Liz Truss,
Yeah, absolutely. Yeah,
a couple of
yeah,
years ago.
yeah,
So
yeah.
it's a useful barometer. Um,
I mean,
but
I think Cameron was a bit silly by putting all of his efforts into Remain. Wilson was far more with it in the
mm,
1970s when he said, I'm going to sit on the fence. You lot sort out whatever you are going to do, and I will then see it through. And had Cameron done that, I think he'd still, he'd have gone on a bit longer as Prime Minister.
yeah, it's pretty. He's very sort of urbane and charming. I was reading a book called Chums. It's about this Oxford elite who
Mm,
have formed governments and leadership for a long time now. It's making the point that really for the last 40 odd years, have been no political leaders who've been through war or served in the military. They've all come through a kind of, much like in France, you have this like elite cadre
yeah.
of politicians who made it university and sort of, helped up the ranks by a club effectively. So it's it's quite a shallow leadership. No matter what party you look at,
Yeah.
you're not having the characters or the statesmen that you have at the past. And we've talked about this before, but it's the same everywhere, I guess.
Yeah, I think you're right. Everything's quite bland, isn't it?
Mm,
I mean, following the Brexit vote, Cameron left and the FTSE went down to 6,138.
yeah.
Then we had May in and it sort of recovered a bit to 6,670. But, it's what we don't see when we sort of come out with specific dates is the roller coaster effect of what's happening in the meantime.
Mm.
You know,
Yeah, it's just picking dots on a chart without when you're
yeah.
living through it. It
Yes,
feels very different.
absolutely, absolutely. I
Uh,
mean, it's quite incredible the majority that Boris Johnson got in 2019.
mm.
That goes and squanders it.
Yeah, and you also got to remember who the opposition was at the time as
Yeah.
well.
Oh, yeah, 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 yeah.
So yeah, just
Red,
don't know what's
red,
going
red Jeremy, red
on.
Jeremy. But yeah, you're right there. I think possibly if it had been somebody that was a little bit more right of the towards the right of the Labour
Mm,
Party, the result could have been quite considerably
definitely,
different
and
from that point of
that's
view.
probably what's going to happen next. As
What about the Liz Truss reign? I mean, that really hit everything for six, didn't it?
it was a great pity because Kwasi was a very bright guy, and it's just unfortunate that the communication of the potential tax cuts was uh, not handled very well. But at the same time, you've still got like a fifth column in the government
Yeah,
of the Office of National Statistics, and it's kind of the mandarins versus the politicians. So this very Thatcherite idea of cutting taxes to stimulate growth and therefore improving the tax income is kind of anathema philosophically to sort of, these sort of, built-in bureaucrats. So they were very much against the idea, and it's very easy to torpedo a topic from within. And so the sentiment was right. Perhaps Truss and Co were naive in the way they did it,
yeah.
and perhaps they needed a Cameron-style person with a smooth PR approach to explain it first before unleashing it on the city, because it's like when you're in an echo chamber in a small group. It sounds like a great idea when you with your buddies. As soon as you go put it out there, it's not taken
It
too well.
becomes a stampede, doesn't it?
It certainly did at the time, and even the Bank of England's own pension scheme was threatened by these liability-driven investments. It's another word for this esoteric sort of derivative vehicles that investment banks push. But yeah, everyone was sucked into it.
I mean, at the time of recording this interview, they're now saying that Truss had the right ideas and they want a Truss person back, but they don't want Truss.
Yeah, it's going to. But when you look at the way she is with public speaking, it's just a bit vague, and there's lots of gaffes going on, and I'll call them old time politicians like Tony Blair and Cameron. I know Cameron's back in the fold, but they went through a lot of grooming. And in fact, I was trained by an actress who also taught Tony Blair in public speaking. And there's you put it's like good comedians. They put so much into rehearsal to make it look slick and off the cuff.
Yeah, yeah.
Some of the later politicians don't have that
No.
that skill. And people like even Boris Johnson, when you're at Oxford, you join the union and like it's debating society, and it's a real it's a trial run for Parliament.
Yeah.
And that really is that's fallen by the wayside a bit recently. And again, you could say it's all just flannel and charm and rehearsal, but it does help if you can communicate your ideas. And
There are a few, not many natural orators anymore, are there?
Not really.
I would say Farage is probably a good example of somebody that can actually take it straight from the head through the mouth to the public rather than relying on a written speech and stuff like that.
Yeah, I saw him about 5 years ago. Went to an economics conference in Rome where he was a guest speaker.
Yeah.
And he worked at a commodity firm, so he's got some financial knowledge. And it's often with, and he's in the background, I know he's pretty chaotic and disorganized, but sometimes people just want a single message which is clear, and
you need a Margaret Thatcher. You need a Margaret Thatcher type of person, don't you?
She was intelligent and
a
good speaker, and she was anti-establishment as well. She didn't like the Oxford and sort of elite clique in government.
Yeah.
She was from a sort of grammar school type background, and she saw the damage that inward-facing elites do by not looking after the wider population. So,
and I mean, when we look at the Oxford setup, it's not just the politicians; it's the civil servants as well, isn't it?
You very much say it is like a club, and it's kind of it worked, particularly in the Empire days. That was pretty successful.
Yeah.
In a wider setting with the European Union and America, it's become, I think it's harsh to say obsolete, but it's not very flexible. And in spite of all the claims about diversity and the like, I think diversity isn't about necessarily it's a racial thing or thing about being male, female, or whatever.
Yeah.
It's really about diversity of thought, and that's what's really lacking, I find. I don't care where they come from. Someone can actually have critical thinking. That's one of the greatest skills you see.
Of course, yeah.
Complete discouragement.
Don't see it anymore. Okay, to conclude, have the markets already factored in a likely Labour victory?
I believe so. Yeah, it's to the extent that a new government can change anything. I don't think that's with the debt levels we've spoken about. There's not a lot Keir Starmer can do. Particularly, he can fill at the edges and change the sort of culture of government. But on the whole, I think the pound has been pretty stable, and it goes through phases. I was looking at a long-term chart the other day where it'd been $2 to the pound, shift down to 150. Now it's at the 125 level. I think the next stage down is parity to the dollar.
Yeah.
And if the dollar starts to devalue, we'll probably go with it, and you won't be able to see it in exchange rates. You'll see it in commodity prices. So I think Labour victory again traditionally hasn't been too bad for markets on the whole. So I think it's really a case of just letting the markets globally find their feet and make their way. So what I would like to see, in spite of half the world having general elections this year, is for the breadth of the market to open up, so that smaller companies are involved rather than just like 10 big tech names. And that's when it's a proper sustained bull market, when everything rises on the tide effectively.
Yeah. Well, there we are. Can I thank you very much for sparing me some time? It's always enlightening talking to you, and we'll see how things are going in July, won't it? The next one.
No more wars, please God.
So many thanks. Take care, Toby.
Cheers.